Hi everyone, let's go over my medium time frame and low time frame bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we've been looking for this ABC to the downside in a 5-3-5 wave structure, where the most common target for wave C is between the 1 and the 1.236 trend-based fib extension taken from the high to the low of A to the high of B, which is between 27.2k and 26.5k, which also has some nice confluence with some additional support areas over here. The bigger box sitting between 26.8k and 27.4k, and the smaller box between 26.2k and 26.5k. Now at the moment, price is finding support on the 0.618. This is a rare target for a wave C. It usually does give a little bit of a reaction, as you can see, but it is a rare target nonetheless and not a common target. And also, if we look at this structure over here, it doesn't look like a finished impulsive structure where you still expect a wave 4 and a wave 5 to the downside. And that is then also the more low time frame scenario, where if we zoom in to the impulse that we're having to the downside, then we're looking for this to be a wave 1, this to be a wave 2, for then a bigger wave 3 to the downside. Now in this scenario, we've been talking in the past couple of videos about this wave 2 because it is so incredibly short in time compared to a much larger wave 1. In wave 2, this was a very nice zigzag to the upside, which is the most common pattern in a wave 2. It hit the 0.5 as well, taken from the high to the low of 1, which is a common target for a wave 2. And from that moment, it moved towards the downside. Now this wave 2 is much shorter than the 0.382 fib time taken from the high to the low of 1. It can happen, especially after diagonals, that you get a short and sweet corrective structure, but one of the scenarios was that we get an extension and another move towards the upside. Well, clearly at the moment that is not the case and price is moving down, where if we are looking for a wave 3 to the downside, then the 1.618 is usually a minimum target for a wave 3, sitting at 27.8k, but as you can see, I got more fibs on the chart because a wave 3 can be very much extended, and if the 1.618 doesn't hold, then usually the 2.618 can be an important area of interest, and then the 3.618, which is below, and la-di-la-di-la. Now if we look at the confluences around these fib levels, then you can see that the 2 over here has some interesting confluence then with my bigger support area, because in a wave 3, the 1.618 over here doesn't have much support around this area. So one can imagine it goes to this support box, and then depending on the reaction here, we can say, okay, maybe a wave 3 is finished and we get a wave 4 over here before then a wave 5 in continuation, or wave 3 continues to the 2.618 and reaches more like this lower area. But that of course is yet to be seen. If we go to the micro, then I do want to talk about what actually happened yesterday, right? So we had two scenarios in mind where, based on the short structure over here, we were potentially looking for another move to the upside in an ABC expanding flat, where wave A is a zigzag, B is a complex corrective structure, and then a wave C to the upside. Now, if I quickly pull the most common target area for a wave B expanding flat on my chart over here, then you can see price returned to this area. It's between the pink and the purple line. Let me remove the 105 as well as the 1.618. And the first reaction we got was very nice. Move towards the upside, bullish, right, 5-wave structure, all good, all great. However, what we have also seen yesterday all the time is the bearish CVD divergences. And once again, over here, we had a move to the upside where I mentioned keep an eye on the CVD divergences on the right side of this low. This, like, CVD divergences during this move to the upside with anything on the left is not as important, doesn't get priority over the CVD divergences that you get on the right side of this move. Price over here moved to the upside. These bearish CVD divergences over here played out once price moved down. We found a high, price moving down, and over here it started to create again bearish CVD divergences. And if I go to the 5-minute chart, the AGGR chart over here, to spot those divergences, then you can see that it is very small, but it is there. Over here, I can zoom in even more. We have a lower high on price, but we have a higher high on the yellow line CVD. That is a bearish CVD divergence where the target is then this low over here. Now, of course, one does not immediately expect such a dump to the downside, but the fact that you see bearish CVD divergences is never supportive, is never, of course, in confluence for a continuation to the upside. The fact that you see bearish CVD divergences over here after you've seen them here all the time, we had so many bearish CVD divergences in this area as well, should at least hint to potential danger and, of course, good risk management. So after these bearish CVD divergences, price moved down heavily, took this low over here. We were at the 1.382, then retested or backtested the 1.236 before then continuation to the downside. And that leads us to where we are now. Now, currently with the bullish scenario, there's not really any great bullish scenario. Yes, price can move to the upside, but every move currently towards the upside is more like a retracement for further downside. So that's what I wrote over here. Any bullish scenario is basically a retracement. Yes, price can move up and then eventually down, but eventually the by far highest probability scenario is that price is finding continuation to the downside. Now, what kind of confluences do we have above us at the moment in case price does move to the upside? Well, first of all, the things to keep an eye on are the order blocks. So if you go to the 30-minute over here, you can see the first order block, which actually just got tested, is this one over here, where you have a 30-minute order block. So this is the first one to keep in mind, right? And if price goes through this one, well, you have another order block over here, right? So these are important areas of resistance. You can find them on the 15 over here as well. Depends on the time frame. Preferably you see one candle in the opposite direction. If it is tested once, that's good, and the moment you go back up, the probabilities are higher to go to the upside and maybe move to the next one. However, another thing I like to show you is the volume profile on the 4-hour. So if I zoom out over here, then you can see two volume profiles. The bigger one over here that you see on the chart, this one is a volume profile range from this area. It shows the volume traded inside of this area at the time, and the volume profile up here, of course, is then a volume profile of only this area. Now, price has been ranging on top of the value area high over here for a while, finding support, finding support, finding support, again finding support. The more often you test support, the higher the probability you're going to break support. And if price can find its way inside the value area, meaning below the value area high, the probabilities are high to go to the point of control and the value area low, with the value area low being at 26.2k. And we know that area because it is part of my additional support box that we have over here in that particular area. But at least the point of control at 27.9 is something you can keep in mind, I suppose. But what also is something you see quite often is price first coming up to retest or backtest the value area high in this case before continuation to the downside. Because if we think about range trading, it's nice to have a bit of a retest, backtest, then move down, where then if we get that, take the low again, potential entries, stop loss, take profit 1, take profit 2, whatever your strategy is. But range trading wise, entries over here can be looking for targets down there with a take profit in the middle. So the value area high is also an important support resistance area in case price wants to move up after taking the liquidity over here. If it moves to the upside, then this area is now an important area of resistance at 28.8k, 28.9k. Support basically turning into resistance. That is then what we are seeing over here. And besides, we also have my white box over here, which now turns into resistance in case price is gonna move above the value area high very shortly. We still have more resistance over here. Over here again, support into resistance, and this area is around 29k, as you can see. So we have a lot of resistance to the upside, not too much support to the downside. If we use a simple resistance, support resistance flips, then over here you can see that price had support for a long period of time, moved to the downside, resistance, resistance, shortly got above, but the backtest failed, the retest failed for continuation, resistance, resistance, downside, and now we are here at support. And you can see if I go back in time, then it was resistance over here, turned shortly into support, might actually go to the daily. Over here, turned into resistance after support, resistance, and now it can be back to at least a little bit of support. And if this one fails, we just look for the next area of interest, right? Support, support, little bit of resistance, order block over here, and then we have additional support. And this support resistance flip is sitting between 26.2k, there we have it again, and 26.7k. Now, if you then finally look at the probabilities of the different scenarios, well, the higher probability scenario already for a while is the medium time frame bearish scenario, where we are looking for a move to the downside. Based on Elliott waves, it was the highest probability scenario after this low. The moment this low came on the chart and this low was taken, this became the higher probability scenario. And actually, we've started talking about it over here because this move to the upside was not an impulse. From an Elliott wave point of view, it's not possible to count this over here as a finished bearish corrective structure for then a move to the upside, especially because over here we didn't get an impulse, and the moment you didn't get an impulse here, any bullish scenario got pretty difficult, and the higher probability was to take the low. Now the low has taken, we're on the 0.618, but the higher probability is to move to that, at least, by the way, to the wave C target area, and this is still the bullish scenario, I should say, if we do have a bullish and bearish one, because the more bearish one is that this is part of a flat where you then have a W, X, and you're going to be looking for a Y, or an A, B, C, sorry, where you have a 3-wave A, expanding flat in B, and then this is a bigger wave C to the downside, but that really depends on the move that you get to the downside. So of course, price can move down and it can go in waves. As always, you know the resistance areas, you know the support areas. I hope you trade safe during this volatility. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.